What's up, people? I hope you're doing well. This is Friday, the 8th of March, and it's a massive day today. We've got NFP for the previous month, so February. Honestly, I am gassed. A lot of the non-traders will think, what the fuck this guy's doing? You know, he's excited about some numbers that really don't matter to him. They do, because I'm a trader. And these will affect the markets massively. It's always good fun to watch them shoot up or shoot down, pump or dump. But this time I actually have no idea what's going to happen. Last month I thought it would melt down, and it did. It dropped crazy. But guys, as you know, don't trade NFP. You'll just blow your account, especially don't do it on a funded account. It is good odds. It's a 50-50. Like, if you're a gambler, just put it on the NFP. Don't put it on football or horses. Like, it is a 50-50 almost. Even less if you, like, the odds on your side if you know a bit about the fundamentals, but who knows. Anyway, I'm excited to see it. 1:30 UK time. Let's get it. Anyway, so yeah, I posted on Instagram like a trade analysis of me speaking and the exact trade, just going through it, and people received it well. My last YouTube video was just a trading update, and I actually had a snippet of a trade I did which explained it, but I didn't have a voiceover video. But now I've worked out how to do that, so yeah, I'm just gonna do show you a couple more trades, guys, because I figured these are like really valuable, especially for people who want to know how I trade and are even more beginning than me, or even more of a beginner than me. You guys will find value in this, I hope. And YouTube received it pretty well, so it's a win-win for everyone, eh? So yeah, let's hop into the charts, and I'm going to show you 2 days, and I'm going to show you a winner and a loser, maybe more, who knows. So let's get in the charts, guys. See you there. Okay, guys, so we are here in the chart. We're on the GBP USD. Let's get rid of this stupid ad. Yep, I'm on a basic. I don't have the money to splash around. Don't come for me. Okay, so on the pound USD, and I just want to point this out, guys, I don't cherry pick any trades. Like, this is last week and this week, just back-to-back trades, as in this will be Friday the 1st of March, and then we're going to go on to Monday after the weekend, Monday the 4th of March. You know, this is literally back-to-back days of me trading. Can't make it up. This is last week. I'm not going back years to cherry pick trades. Like, I'm just showing you guys. Cool. So yep, you can see a bunch of analysis, but we're zooming in here on the 1st of March. So I have this little funny indicator, and it is called Asian Range by Nico 948. And it basically just tells me, it points out really simple what the high of the Asian session was and what the low of the Asian session. Oh my god, man, I can't even speak. Asian session. I need to slow down. But then the video will be long, so I've got to speed up. Anyway, I digress. So it shows me the high and the low of the Asian range. And then all I do is I just draw these dotted lines, as you can see, out. Just because the Asian high and the Asian low represents liquidity. And almost 100% of the time, during the London and the New York session, price will at least go to sweep one of them. In this case, on Friday, it swept both. It went to the high, then dropped to the low, which we're going to take advantage of. But it will always at least take one. You know, there's no way London and New York will just consolidate unless something crazy is going on. So it's a key liquidity point. Price usually likes to sweep it and return it, and that's what we base our strategy off. Just for our intraday trading. Obviously, if you're swing trading, it's a bit different, but yeah, okay, cool. So let's see. I like these YouTubes because I can actually analyze it and not have to keep it to 90 seconds. You know, screw Instagram. Anyway, so you see this out. Price has swept it there. Very little though. It probably hasn't taken all the buy stops. No. Yeah, well, it hasn't taken all the buy stops and all. And actually, as you can see, so my strategy is sweep of liquidity, change of market structure, and then change of market structure, and then leaves a fair value gap, a displacement leaves a fair value gap. We retrace into the fair value gap, and then we shoot down. Cool. So in this scenario, yes, we have a fair value gap, which we'll highlight. This is I'm working on the 3-minute time frame right now. Highlight it in red for my fair value gaps. So there we go. That's our fair value gap. but we don't have a change of structure on a 3-minute shift. You see we have a big move up, sweep liquidity, but then we just drop straight down, and we haven't. This would be our structure point here. Get the fuck away, the ad. This would be our structure point, which we didn't actually break, so it kind of invalidates the trade for me. What we can do, and what we'll see later, is that you can drop onto the smaller time frame. Oh, hang about. Am I even going to be able to see it? Shit. Damn it. Okay, the 1 minute. Okay, I'm going to upgrade to the essential after this, but whatever, go. Fuck's sake. Anyway. Cool. Oh my god, I'm tripping out. That's not even the trade. Where the hell is the trade gone? Here we go, here we go. Too many trades, man. Okay. And we can drop onto the 1 minute time frame, and there will usually be, you know, there's a lot more detail on the 1 minute time frame. There will usually be a change of structure on the time frame on the 1 minute, but I just thought, you know, it's too early in the session. You know, for me, this is 7:30. I probably wasn't even on the charts then, so I did miss this trade, which is a good thing because it turned out to be a loser. But I didn't take it. If you were on the charts, I would have patience, and I probably wouldn't have taken this anyway, just because it was a weak sweep of liquidity, and did leave a good displacement fair value gap, but it didn't have a change of structure. So yeah, and then okay. And then we can see it as it hits 8:30. This is when I am getting on the charts. This is after I've done all my morning routine and stuff. We have another liquidity point here. As we know, there'll be buy stops resting above this point here. That point there. There's buy stops. So what's price going to want to do? It's going to want to take them. That's how they make money. So what do we do here? We shoot up. We swept liquidity. We swept Asian high. We swept this liquidity. So we have a lot of liquidity for a move down. We know that. We've done that. So cool. And then, yeah, no, all good. So yeah, sweep high, swept liquidity. And then you can see there's 2 black candles here that have displaced down. And then as you can see, this, just because of experience, I'll know. But in time, you would have gone down to the 1 minute time frame. But this right here, that point there, that will be a structure. That will be a support on the 1 minute time frame. And so we broke that with strength. Because there's no structure shift on a 3 minute. So you're thinking, what the hell? I did remember going down onto the 1 minute for this. So we do that, broke the structure, create the displacement. Get the fuck off. Hello, can I delete your ass? Oh my fucking god. Get the... Okay, finally, holy shit, that was not that hard. Cool, and then what do we leave, guys? Price always repeats this. It's just a fact. What do we leave? Boom. That's right, a fair value gap. You can see there's a gap between this candle's high and this candle's low. There's a gap here. So we're going to zoom in. We retrace back up into that. You see, we retrace back up into that. So that's what I'm thinking. Okay, everything ticks off. We're shorting at the open, or the open of the fair value gap. We're I'd probably put my stop just above the high, just because it's quite close. And we go for 1 to 3, which is 1 to 3 is a perfect trade. You guys can go for a 1 to 2, it doesn't really matter. But I like to go for 1 to 3. And in this case, it did work out very nicely. And we weathered barely any damage. You know, it hit the fair value gap. And in this case, you could have dropped your fair value gap to just above the high, which is also a point to put your fair value gap, and we got a 1 to 8. It's just a bit risky. Spread probably would have stopped me out. So yep, that is the first trade. And we actually took 2 trades this day, which is this one here. Cool, and then what did I say? Asian high, Asian low. We come back down, we sweep the liquidity of the Asian low here. Look at that. We've gone down, we swept this dotted line. So that means we now we have the momentum and we have the power to push for a move up. We can do it, so let's do it. So cool, I'm looking to go up, all of that good stuff. Yep. Cool, so I go up, and then here, do you see this point here? This is a swing high. So draw along, I just use orange. That is my structure shift. That is my market structure shift. There, so we've broken structure. So we know we've confirmed we're now in a bullish move because we've changed. We've broken a high. We go up. I'm waiting on the fair value gap. There is a tiny one here, but it's just kind of too small. I probably wouldn't pay much attention to it. Plus, price has a lot of volume behind it. It's going up too high. Chances are it won't retrace back into that fair value gap. It just happens. It's something you're gonna have to learn with experience. And then, yeah, and then cool. Look at what we create here. What the fuck am I looking at? There we go. My bad. From this candle's high to this candle's low, there is a gap. We have our fair value gap. Then what does price do? Price retraces back into it like we thought it would, like ICT tells us. So our entry is at the open of it. Our stop loss would be just below, because you can't, like, that's too much of a stop loss, guys. You have to keep it realistic. So you have two entries, one below swing low and one below the fair value gap candle. It's too big to do it behind the swing low, so I'll do it just below the swing, just below the fair value gap candle. What do? We do a 1 to 3, and boom, just like that. Again, not much damage in the storm, and we just show up to take profit. That is a great day. Thank you, Friday, the 1st of March. Fuck off, City Index. I don't want to get the fucking ad out of here. Holy fuck. Okay, like I said, I'm not cherry picking. This is literally last week. We go on to Monday, the 4th of March. Cool. This one's a bit different. I added another confluence. You see here, this big blue rectangle. This is a 15-minute order block. Here, so I was supply zone, order block, whatever. I was waiting for price to come back into that. It then did fully closed it. Went all the way up, and so I had a feeling it would drop soon. Obviously, we had a big bullish move. We've swept the Asian. This is Monday, 4th of March, guys. We swept Asian high. Big bullish move up, leaving some fair value gaps. I'm like, yeah, okay, we're gonna drop. So I was waiting for it. Boom, high. Liquidity's already been swept. Big move down. Market structure shift right there. Market structure shift right there. And then we leave a big fair value gap. Just get rid of all of these just to show you guys. Big fair value gap here. And so I'm then, once that's all ticked off, so I'm just waiting for it. I'm waiting for the price to come back into this, and it just never does, unfortunately. So that will happen, guys. It doesn't happen all the time. That's just life, that's trading. It's not always going to do what you think it's going to do. So price didn't come back into our entry zone. Would have been a really nice trade, and it would have hit a 1 to 3. But it just didn't come back. It got close, almost there. And actually what you could have done is, because there's two fair value gaps, let me just see. So I didn't get in this trade, but here you go. Fair value gap created, and then price does come back into this one. So there's often two fair value gaps created, and you don't know which one to go. I'd always go with this lower one. It will give you a worse risk to reward ratio. And in this case, it does actually work. So again, guys, there we go. It's worked again, but I didn't get in on that trade. I'll be honest. I'm not just gonna lie to you guys. And then I did actually take this one again. Yeah, guys, I'm still learning. Like, I don't know really why. I probably shouldn't have taken this trade. So what I saw price go down. Then we saw a big move up again into, you know, what retail calls a level of resistance. You know, I saw it as the order block here. And I thought, okay, you know, we've gone quite high up. I could probably see a drop down. And then what tricked me in was this massive bearish candle. I was like, whoa, okay, we've got intentions here. Like, holy fuck, we're 100% going down. And then when you saw this here, this is our MSS, this is our market structure shift. So I'm like, okay, we're now bearish, big bearish candle. You know, it's got intentions. We're going to go down, and it's created the fair value gap. So everything ticked off, right? So put our entry there, stop loss just above the high, and we go for 1 to 3. And then as soon as I got in, everything ticked off. Like, it should have been a really nice trade. Everything was tick, 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 enter. And then it just consolidated and then shot up and we hit stop loss. So that's an example of a loss, guys. Like, this doesn't happen every time. I need to do some more back testing to find the actual results. I think it's probably around 70 to 80% happens. You know, it's what ICT calls it goes off the algorithm. Whether that's, you know, I don't know too much about that. I don't need to know why. I don't need to know all of that. I just need to know it happens, and it happens again and again and again. So I might as well get on board. So that's how I've been trading, guys. As you saw, 2 losses, 2 losses, 2 wins, 1 no entry and 1 loss. So that's 2 wins, 1 loss on a 1 to 3. That's 6R, 5R in the space of 2 days, 2 consecutive days, which is very good. And that's arguably over trading, which I'm currently working on. But yeah, I won't make this video that long, guys. I'll keep it below 20 minutes. I don't want to bore you guys. I'm not ICT. I'm not dragging this out for 2 hours. But yeah, that's just some more examples of my trading. And as always, if you guys want to message me or ask questions or just, you know, network, because iron sharpens iron. My Instagram is @midmoneytrader, all lowercase. I'll reply to everyone. Honestly, I find it great fun networking. And I'm here to help you guys, even though I'm learning. I'm not a financial advisor. This is just me documenting my journey and showing you how I'm doing it. So I can look back in the future and just look at how far I've come. Because I'm telling you, I'm going to make it. I know I am. So yeah. Anyway, as always, I'm rooting for you guys. And I wish you the best. Good luck for NFP today, if you're watching this. See you later. Okay, guys. So we are here in the chart. We are on the GBP USD. Let's get rid of this stupid ad. Yep, I'm on a basic. I don't have the money to splash around.